All right. Hey guys, welcome back to our Philip Training Podcast. I'm your host for today. My name is Aiman, and I'm a dealer here at Philip Capital. Now, before we start, please take note that this presentation has not been reviewed by the Security Commission Malaysia, and it is for general educational purposes only. It is not an invitation to buy or sell any investment products. Hence, the speaker and Philip Capital Sdn Berhad are not liable for any financial decision you may make based on the content of this presentation. So, with us today is extremely experienced speaker, Mr. Devin Ng. Welcome to our podcast today. How are you today, David?
Yeah, I'm good, Iman. Thank you for having me today.
All right. So now, before we start, let me just bring you through a quick introduction to our esteemed speaker for today, Mr. David Ng. So, David Ng is currently a full-time proprietary trader with Iceberg X Berhad, a local proprietary trading firm based in Kuala Lumpur. He has done extensive research and is well-versed in the commodities and indices market. He currently trades in the Malaysia Index, a crude palm oil futures market, and holds a CMT designation as a chartered market technician. And previously, he led a young and dynamic team with a prominent local broker to promote futures and derivative instrument to the Malaysian public. He conducts a regular public seminar and also webinar on topic relating to futures trading and has aided individuals in starting their trading journey. In addition, he also provides a frequent market commentaries to local media like Star, Business Time, and TH in that role. Yes, what an interesting speaker we have today. Well, I won't hold too much of your time, so let's get straight into the content. On to you, David.
Yeah, thank you, Iman. Thank you for the very thorough introduction. I just prepare a couple of slides just to let the audience know that what I'll be speaking on the 30th of August. Crude oil is not it's not an easy product to begin with, and market nowadays are very volatile, so crude oil is no exception. So hopefully in this session, this webinar session is upcoming on the 13th of August. I hope to able to share some insights that is quite useful. If you are new to the crude oil market, probably that can help you to kickstart some sort of your trading journey in the crude oil market. So I'm just going to share my slide. Just let me know, Ayman, if you can see my slides. Yep, I think it should be up. Uh, Looking good. Okay, yeah. So I'm just going to do a quick preview of what I'm going to talk about. Just to reiterate what Ayman just mentioned, this presentation is purely for educational purpose. Just to reiterate the point that usually the materials are not vetted by the regulators. And always make sure that whenever you are new to trading futures or any type of other asset classes or financial asset classes, make sure you consult with licensed and legal entity. I believe Philip Capital in this area can help you to do that. Now, I think the next in the next webinar, on the 13th of August, this is what we're going to cover. Now, I think trading crude oil as a product of a commodity is we can't run away from basic supply and demand. Now, crude oil is slightly interesting because we have seen prices as high, it went up to as high as 120, $130 per barrel during after when we just came out from pandemic. And during pandemic, we have seen negative prices for in historical basis. We have not seen that that kind of prices, negative prices, even quite hard to comprehend. But having said that, I think crude oil has pretty much seen its ups and downs. And I think crude oil right now trading between the range of 55 to 65 US dollar per barrel. Is this the new normal? I think importantly in the webinar session, I'm probably going to share with you what are the areas to look at, especially important factors to assess whenever you are trading the crude oil market. So really, I mean, the key question we need to ask ourselves is crude oil at this level, is this going to stagnant, or is it, or there's room for crude oil to even go lower? Now, I'm not, in my opinion, we can't, personally, I feel that we can't be too bearish on the crude oil market, because there is also other factors worth to consider, and it's also important to look at, especially when you look at the factors that's affecting oil prices. You keep in mind, despite people talking about EV, destruction of oil is oil demand may peak, but all these factors also point out to there's another side of this narrative, is that production of crude oil has actually been dropping quite some time. There's no new investments or new capex, especially from all the big oil companies. So all this will cascade and will have an effect down the road. So eventually, in that webinar, I'm just going to share what's my reason why oil prices, uh, even though it's staying at this level, if there's any disruption, it's going to spike up. So be very careful for that. Now, now, second thing is that we always talk about Trump. Nowadays, if you are trading any markets, whether it's your CPO, your KLCI, even your index, or even crude oil market, for example, we all look at what Trump will do. So, Trump is a very big factor. So whatever Trump dictates will always, put a lot of effect onto the market. So I just, in that webinar session, I just going to probably detail to you what are the certain things to look at, especially when it comes to Trump tariff, which it potentially will have an impact in terms of oil prices. I think the last bit, I always talk about having a way to get yourself into the market by using certain trend trading tools that can be applicable, especially in the oil market. So I'm going to share all this, the three main things to cover in the next 13 August webinar. Now, so this is what I meant. You look at the oil, this is oil chart daily. So you can see that, oil prices are pretty much hovering between the 55 to 65 US dollar per barrel. So the key question is, what's the next direction for crude oil? Like I said, any potential disruption in oil supply, it could be geopolitics, it could be, Middle East tension. It really can spike up oil prices. So if you are trading the oil market, these are the areas that you really need to pay attention. And these are the things that's very hard to predict. Geopolitics is we can't really predict much. Now, obviously, conflicts are certain region conflicts are starting to ease, but whether that will sustain is another question. And by having all this environment, eventually that will support a higher oil price environment. So I'm going to give you my argument and why I think is that's the case in the upcoming webinar session. Now, trading Trump, Trump, being in office right now for the second time, and his secret weapon is using tariff. So obviously, moving into second half, things may not look so rosy. We just started Trump tariffs, just start implemented across all the countries, which is a major trading partner with US, back in early last week. So it's still too early to assess the impact. But having said that, I think moving into second half of this year, I think things are not looking so good. So when economy is not good, business is not good, that will tell you how's the demand for oil. So Trump being Trump, he always like, cheaper oil prices, because that will in a way boost consumer confidence, because inflation is going to be low and all this. So really is that really the case in reality? There's again is there'll be a couple of factors to be aware of, and there's certain elements that we need to be careful as well. So I'm going to cover all this in that webinar session. So Trump, is really playing a chess game here. So you can see that Trump just imposed heavy tariff on Russia and India. India specifically because they have been buying a lot of Russian oil. So as part of the deal with India is that for US to lower India's tariff, part of the deal is to buy US oil. But you don't see that. And again, uh, Russia oil is usually priced cheaper in the international benchmark. So therefore, there's a lot of incentive for India to purchase oil from Russia. So again, all these elements between inter countries will have an impact in terms of oil prices. So really, will Trump be correct? Will we see 40 or 50 US dollar per barrel in terms of oil prices? It's tough to see, but as long as key things to watch is that as long as global economy is not moving as fast as we want, or there's in fact negative growth in certain pockets of the world, then potentially or possibly we could see oil prices coming down because the demand is actually getting weak. So no, really, this Russia is a very big element when it comes to oil supply because Russia is not a small supply of oil. It's a major country. In fact, it's part of OPEC plus. So, Russia is a main player, and now with Russia and US, doing this tariffs pact between these two countries, really is going to be something that is worth to pay attention, especially if you are trading the oil market. Now, I just also in the upcoming webinar, I'm also going to be sharing about looking at forward curve. Now you can see that forward curve, when it comes to commodities futures, it's not an easy concept to grasp, but it's important because if we understand prices of commodity curve or commodity futures for the distant prices or distant time prices, we can probably get a gauge on how the market is going to behave. So if a market is a clearly oversupply market, we should see a market that is pretty much a backwardation market, which means that moving forward, people are actually more bearish with the market. So you can see that in the oil market. So I'm just going to explain more in the upcoming webinar as to how we can use this information as a trader to gauge what's the sentiment of the market. Is the sentiment of the market too bearish or too bullish? Because once you understand the sentiment of the market, then from there we can actually better position our views or our trades with the market. So I pretty much have this much to share on this preview. So do tune in on the 13th of August, which I'm going to share a little bit more and even specifically on how instances or scenarios that you can use to tap opportunities, to gain opportunities when trading the oil market. Keep in mind, now is a good time because first of all, we have introduction of CME micros, small contracts, smaller margins. Those days, if you want to trade oil contract, it's not easy because the margins required is very high. Nowadays, we have micro contracts. It actually makes things easier. It's more accessible. It's second thing you need to really understand is the sizing of your position. Now, I think secondly is that with Trump being an element or is a variable itself, uh, Trump is definitely going to create a lot of uncertainty, and with uncertainty that means volatility. So as a trader, we like volatility. We don't like quiet market. When there's nothing much or news catalyst that can move markets. But once market is more volatile, there's actually more opportunity. But always make sure the downside of having a market that's very volatile is that your risk measurement has to be very strict. So if the position go against you, you should and you must get out of position. So I'm going to cover all those, including how to manage your risk, trade risk, especially when dealing with the oil market. So hopefully to see you guys on the 13th of August for the webinar session. So over to you, Aiman.
All right. Okay. Uh, okay. Wow, that was such an insightful session. Okay, thank you, David, for the insightful on the trading crude oil market, especially on the CME. For those who are interested to know more, you can join David's full-length live webinar on the same topic today on Wednesday, 13 August, 8 p.m. to 9 p.m. So don't miss out, yeah? So also you can utilize the insight shared by Mr. David Ng by gaining exposure to the CME markets with Philip Capital as low as 4 USD. For more information, you can visit our website, philip.com.my. Thank you all for tuning in, and thank you, Mr. David Ng, for your time.
Thank you. See you guys soon.
All right. Okay.